Hello everyone, welcome to the Hidden Game. It has been a minute since I last posted any video, so let us resume the journey that we are on. In this video, we will talk about the AI funding cycle. Now, the biggest experiment in game theory in understanding how people behave, how organizations behave, is happening right in front of us and at a scale that has been unimagined until now. To understand how money is flowing among the artificial intelligence related companies and why it is becoming such a big problem and gaining the attention from the news cycle, we have to understand the concept of money first. In this video, I want to start from the very basic question that is fundamental to understanding why this is a problem, and first of all, if it is a problem. To put it concisely, money is contract between a service provider and a service receiver, or in other words, a contract between two intelligent agents. Now, if you might have heard people say that money is God, technically it is not wrong because the common understanding of this contract gives the value to the entity itself, just like a common understanding in a religion or in God gives meaning to the existence of God. So the money is pretty much the difference between the credit side and the debit side of any transaction. So if I put it in other words, if I were to sum all credit side and all debit side of the entire world's population at any point of time, the total amount of money will be zero, as in the total credit of the entire world will be same as the total debit side for the entire world. So if the entire world's credit and debit side are always going to be balanced, why is the circular funding of artificial intelligence companies or any cartel for that matter such a big problem? And the reason for this problem is who gets to choose if a contract can have an individual's name or if I can put in a contract on someone else's behalf. That is pretty much the root of the problem. So in this credit and debit side of the contract, the if I put the name money on the credit side, it would mathematically just mean the same thing, right? Mathematically, be it'll still sum up to zero. So if I focus on the money side, right, on the credit side of the entire economy of a closed system, let's say United States for comparison, and if I divide this whole money, the total sum of money in United States in two buckets. The two buckets are, the first bucket is the pool of money that an individual or an individual entity can spend on their behalf based on their choice. Let's say the money that I have in my account, I can spend it, howsoever I want. Uh, any money that is with, say, a corporate entity, let's say Apple or Google, they can spend that money at their own volition. The second group of money, the second bucket of money, is what is being spent on behalf of someone. Let's say my 401k, for example, is being spent by some other entity on my behalf. Similarly, hedge funds are investing money on someone's behalf. Endowment funds are spending money on someone else's behalf. So, the way I would choose to spend my money, somebody else may choose to spend that money in a completely different way, and I may or may not have much say in determining how that investment is being made. So when you see these massive numbers thrown at the artificial intelligence companies in terms of funding from company A to company B, company B to company C, essentially that money is coming from only these two sources. Either the entities, the corporate entities themselves are funding these, which is, I feel it's less likely. Uh, Mostly these funds are coming from the investor side, which is investing money on someone's behalf, someone's endowment fund, someone's retirement fund, someone's pension fund. And given the fact that the money is pretty much a contract between intelligent agents, creditors and debit sides, as we talked about earlier, this notion of money, especially when it comes to future contracts, can just evaporize at any given point of time. As investors' feeling change, as the company's feelings change over a period of time, the promise for the large funding promise for future can be honored or cannot be honored, and based on that the valuations can go up and down, and definitely affecting the money that is actually spent on doing the work on ground. Let's understand this game through an example. Let's say a corporate entity buys a certain stake in an artificial intelligence company. Now, the artificial intelligence company need to use certain compute, storage, cloud resources to run its business. Now, the it's not a coincidence that the AI lab is, or the smaller entity is going to be using the giant companies, the larger companies' AI resources, right? Their compute and their resources. So this is part of the deal itself, right? So from the large companies' point of view, their accounting would show that their sales have increased. They are generating revenue from this transaction, and what it appears to is that there is an increase in demand for this company. So this round tripping of fund from a giant corporation to a smaller entity and back to the giant corporation in terms of like revenue appears like an AI demand, for example. In other words, the corporate entity may show it as a generated revenue because of their infrastructure, but essentially this is just an accounting trick to circulate the same money and show it as a revenue that is being generated. So if you look at money flow in a large organization, let's say the country itself, like United States, you will see that money always goes in circles. Government issues bonds, the investors buys those bonds, they lend money to businesses, businesses employ people, people consume goods and services, so they spend on that, and the money pretty much goes around in circles. And the corporations and businesses, they spend in building their business, expanding their businesses, paying taxes, individuals pay taxes. So at the end, the money flows through a circular motion. Anyways, so money flowing in circle itself is not a problem. Money naturally flows in circle because, as we said earlier, that credit and debit side has to match all the time. The net sum of money in a large system, in like around the world, is going to be always zero. But the problem comes when the money is circulating in a really small group of players. What we, in other words, may call it as a cartel. The artificial intelligence companies are pretty much running like a cartel right now. Just looking deeper into the artificial intelligence ecosystem, you'll see few players. There are chip makers, there are cloud service providers, there are artificial intelligence labs like OpenAI, like Anthropic, and then there are investors. So the incentives for these companies or these group of companies are slightly different. The semiconductor companies, their incentives lie in maximizing their sale of GPUs, their sale of other hardwares. The incentive for the cloud providers lies in maximizing the token burn rate for these artificial intelligence companies like OpenAI and Anthropic. The companies like OpenAI and Anthropic, their incentive lies in having access to infinite amount of cash so that they can continue to be in the race. They can kind of show the promise of the technology. And from the investors' point of view, who are investing in these companies, their incentive is to show the huge potential of these technologies in future. No single player in this ecosystem has the incentive to sit outside or sit on the fence and say that, hey, this is the money in this system is flowing in circles. So as we talked about it before, that money flows in circles in any system, large or small. The problem is not that circular financing is illegal, it is perfectly legal. The problem is that it is a strategy, and the benefits of this strategy is shared among the few key players who are in the circular financing world, and the losses of this strategy, should this strategy fail eventually in the future, would be spread across the larger population. For the strategy of circular finance, the returns are not proven. You will not get the return from participating in a circular finance environment, but not participating will have consequences which are perceived to be higher than, let's say, participating in a circular finance and maybe overbuilding and incurring some loss. And this is more like a arms race problem, that everybody else is spending in a circular finance environment, circular finance game. So not spending or not committing in that environment becomes a disadvantageous strategy for the companies. So if you stop funding, your partner will stop buying resources from you. If they stop buying resources from you, your revenue will take a hit. If your revenue takes a hit, your investors may perceive it as like a lossy business or a business loss, and your equity stakes may show decrease in value. Look, you don't need to have a malintent to build a cartel, right? These could be rational players engaging in a business and doing something that is good for their business in all positivity and without any shed of malice. It is just that when a system like this starts to emerge, the what the individual players are betting on is that the larger market will take notice. They will start funding in the resources, or their money into the system, and all participants in a cartel will benefit from it. So when you hear that artificial intelligence demand is exploding, you hear that in future, you have to pause and think, whose money is this service buying? Is the first group, where if you remember in the earlier in the video, we talked about two group of monies. The first is the one that is accessible to the individual and they are spending it on their own volition. Are they the ones spending these services or buying these services, or is it the second group or the second bucket that is funding these initiatives, like the investor who's buying on my behalf? So if the buyer of the services are funded by the sellers themselves, it's something like a casino is giving money to the gambler to continue gambling. Now this is a sign of financing architecture, of encouraging the cartel behavior. So a lot of news outlets have started noticing this. So it is not just like a conspiracy theory anymore. Bloomberg published a chart of multiple entities and the circular deals that are happening among them. The Bank of International Settlements also shared their concern that a lot of artificial intelligence investments that are happening are circular financing, where the leverage and the risk are not properly disclosed. Critics like Gary Marcus argue that this artificial intelligence economy numbers will never make sense until the productivity explodes way beyond the historical norm for this industry. Another popular critic, Ed Zitron, says that OpenAI is the central piece, the load-bearing wall of the AI ecosystem, and a failure of this company will not be like a failure of just one entity or one player. It will be the system event that will define how this whole circular funding situation collapses. Look, I'm not saying that you need to go ahead and start shorting the publicly traded companies in the artificial intelligence circular financing world. The market can stay irrational for way longer than you can stay liquid. The same bubble or the same circular financing generates the revenue numbers that inflate the stock prices. They lead to bigger bonuses for the companies and the employees. the same circular financing becomes the reason for the burst of the bubble and laying off people and destroying businesses at the same time. So you need to ask more nuanced questions when it comes to artificial intelligence, circular financing. At what point will you do you need to see the organic revenue growth happening, where the money is coming from larger economy, from different participants, and the portion or the proportion of the circular financing happening between the artificial intelligence companies become smaller and smaller. I think that artificial intelligence, circular funding, and the boom in the industry can continue for quite some time. Even though it doesn't make sense, even though it may appear irrational, but it can continue for a really long time, because as long as the investors are hooked in for return, and if they are able to see the return through any means necessary, circular financing or organic revenue growth, they have incentives to stay engaged and stay invested in their portfolio. As long as the investors are seeing the revenue growth in the investments that they have made in these companies, either through circular financing or through organic revenue, they have incentives to stay logged in their position and not change it. Only when we start seeing, say, a new industry rising up in terms of promising better returns than what they are seeing in the artificial intelligence economy, or when artificial intelligence economy is at a point where they have not been able to kind of recuperate the returns that they had promised, and investors are looking for the next big thing to continue their kind of alpha in their investment strategy, then the investors have the incentive to change their investment from artificial intelligence companies to this new category that I don't know about. But I don't think that time is coming, anytime soon. As the AI boom continues to run its course through the circular funding, through the organic revenue growth, or whatever mechanism, we need to observe that there are really smart people, really motivated people engaged in making sure that this business or the thing that they're building actually is a success in future. So I'm not kind of betting against really smart people. I think a lot of promise is still within this industry. uh, what remains to be seen is how cost effective it is going to be in future, and at what point the investors would start to expect to see returns from this industry, and they start to see incentive in changing their portfolio from this industry, from taking funds from this industry and putting it elsewhere, hoping for more return in future. With that said, let's end the video here. Thank you for watching. Just go ahead, smash that like and subscribe button on your way out. Thank you.